Hey everyone, and welcome back to Cash Talk. Today, I'm joined by a very special friend and a person that I've been listening to and being involved with for a long time now, Alex Pollak. Alex is one of the most respected investment managers in the finance world. He has over 25 years of experience in the disruption business model space alone. Alex is the director of Loftus Peak and heads up one of the best performing teams in the disruptive investment space in Australia. He was instrumental in bringing over Seek and carsales.com.au to the Australian stock market. He has an in-depth knowledge in investments and global change companies, and has featured in many times in ComSec News, Sky News, and many other popular outlets where I first started to listen and learn from you, Alex.
Oh.
So, Alex, thank you, and thank you for joining us today, mate.
Thank you very much, John. That's a fantastic introduction. I don't think I deserve it.
No, mate. You've done very, very well, and a lot of your wisdom and a lot of your knowledge is something that, for me, being in the industry for nearly 2 decades, is been following your journey. And obviously, very, of late of the last year or two, we've obviously started to get a bit of more of a closer connection and understanding, the intricacies of what you do, and it's very, very good to share a close space with you and be able to kind of collaborate on some stuff. So once again, thank you very much for joining. And a lot of people are itching to listen to this one.
You're very kind.
That's it, mate. That's it. Hey, mate, you've been in the industry for a fair while. And I'd just love to know, how you got into the world of investments and why you love what you do.
So, out of when I was a young man, a long time ago now, I kind of drifted into journalism, and I do mean drifted into journalism. And the only jobs available in journalism were in the finance section of the Sydney Morning Herald, where I was lucky enough to get a kind of preliminary gig. And I kind of found it really interesting because, it was kind of clear to me that the world really operates. There's a political way that the world operates, and there's a social world that the world operates, but really there's the financial world, the way the world operates. And I kind of always have said that business is a blood sport because, it's like hunting, right? You either love it or you don't. And it was really interesting to me to see how the world actually, operated through business. And then, then I worked for a stockbroker, that was 35 years ago. And then I worked for Macquarie Bank, and that was 25 years ago. And then, 10 years ago, I left Macquarie Bank, and 8 years ago, I started Loftus Peak. And here I am, an overnight success in 40 years.
It's so interesting. You called obviously business a blood sport, and I can exactly understand what you're talking about. And it's it also is not made for everyone. Business is,
No.
For people that think it's easy, it's not. And like you said just before about this overnight success, I think a lot of people, even in business, think that, there's these overnight successes, but these stories happen for a long, long period of time. And now we look at you in Loftus Peak, there's decades of learning and successes and failures and successes and failures to now get to where you are. And let's be honest, both as business owners, there's continuous, learnings that we're learning every day and failures and successes again. And you really got to love what you do to continue to push forward. But
yeah, because it's a lot of hours of your day, and it's got to engage you, right? And I genuinely, I do love it, and I still love it. I love it, heaps actually.
Yeah, it is. And I can see your passion, and that's one of the reasons why I really wanted you to jump on. You know my passion, and a lot of my listeners and viewers know the passion that I bring. So I love to bring people who are also passionate about what they do. We've got a few questions, and to be honest with you, for the people that are listening, I kind of shot this out to a few of our clients and tried to get a little bit of feedback. And obviously, we're here to talk about a lot of what's going on in the world today, a lot of in regards to investments, and really try to, sorry, Alex, unpack your brain a little bit in regards to some of the stuff that's going on. And just to put it in context, because this will be on podcasts and YouTube and whatnot, but it is the 10th of December in 2021, just so for people to know when we're recording this. So first I want to get onto is about the FANG stocks. All right, guys, we're talking about the Facebooks, Amazon, that kind of club, okay? The stocks have performed extremely well. Obviously, they've just, absolutely skyrocketed over the last few years. do you think that these companies will continue to disrupt, okay, and therefore remain a core part of potentially Loftus's holdings and maybe be a big disruptor moving forward as well?
So the answer to that question is yes. And the reason that the answer to that question is yes is because there's a bunch of things that they're built on. And so, let's unpack the first one of those things, and that's networks, right? So plenty of companies have had 1 billion consumers in the last 100 years, Coca-Cola, etc., General Electric. There's stacks and stacks of Boeing, there's stacks and stacks of them. But almost no companies in the last 100 years have had 1 billion consumers that they've been able to communicate with on a moment-by-moment basis. And so the really big change that's happened in the last 20 or 30 years has been this ability to communicate on a mass basis, but on an individual basis at the same time. So all of these fangam companies, Facebook, Apple, Netflix, Google, Amazon, have the ability not just to sell products to their customer base, but also to communicate with their customer base and to know what their customer base wants. And so the ability to add on new businesses is kind of trivial when you're communicating with those customers on a daily basis. So thinking about Apple, that's an obvious one, right? Thinking about Apple, they make phones, that's great. But over and above making phones, they also have a payment system, which because all the phones are connected and Apple knows who you are and all that stuff, you use Apple Pay on a daily basis. You don't think twice about it. The company's less than, 5 or 6 or 7 years old. I'm not exactly sure, but it's already, a multi-billion-dollar company with billions of transactions. I don't know on a daily basis, but certainly on a weekly basis, probably is on a daily basis. And so they have what we call these businesses that come as a result of being able to communicate adjacencies. So the fact that Apple or Amazon or Google has these consumers or customers that they can communicate with makes it really easy for them to spin up a business. In the case of Apple, like Apple Pay or Apple Music or Apple Movies, same with Prime, right? Jeff Bezos famously says, every time I get an Emmy award for a television program, I sell more soap powder in Omaha, right? So that's the point, right? Because you're on Prime and you're watching a television program that's won an award, an Emmy or an Academy or whatever, and then they get to say in the advertisement, hey, by the way, do you need, is your laundry full, right? You need a bit more stuff. So there's been plenty of businesses that have 1 billion customers, but there hasn't been 1 billion people that have 1 billion customers connected. I notice you're wearing an Apple Watch. That's another thing, right? So the Apple Watch enables you to have, your heart rate monitored. That's and if you fall over and you hurt yourself, it's got a motion detector that says you're horizontal and not vertical. It'll call the ambulance. So all those things come up as a result of the ability to communicate. And that's what drives it.
And I think from my perspective as well too, you've got going back into history, you've got like Boeing, you've got Coca-Cola, you've got all of those ones which are those big kind of names. McDonald's is probably another one, but like even Macca's, you need to kind of drive in, drive out. The experience is very like Coca-Cola, it's drinking the drink, and then the experience is gone. Where you even listen to like Bezos, you listen to Zuckerberg, you listen to back in Steve Jobs. I don't know the new one, I forget his name, but the gist of it is they sense that they want to continue to just get closer and closer and closer and closer to when it's like fully integrated. I was listening to Mark Zuckerberg's interview with Gary Vee, and he was talking about this virtual reality kind of experience that they want to do. Well, it's not really virtual reality. It's like augmented reality where you've got the, whole Star Wars, Star Trek thing happening where you've got like holograms of people, of loved ones or whatever it is, and you're talking and you're touching and you're feeling. And it's like, Alex, let's not have this meeting here. Let's have it in Zimbabwe for a moment because we want to have it there. And literally it feels like we're there. And now when you're crossing over to that realm, that connection between like reality and not reality and intertwining and connection, that's a totally different world we're talking about here. And when you've got Zuckerberg and people like that saying it, well, mate, Bezos, I know, and which we'll get onto in a moment, Elon Musk, they're playing the space race because they can. This is not out of the realms of what they're going to do. This is where they're going.
It's powerful because, one of the next generations of VR trackers that'll come out from Zuckerberg and others will have eye trackers and facial recognition trackers so that they can tell whether you're smiling. And so you can be in the virtual room with your friend or more important at this point, business partner. And, you can gauge each other's reactions, not just through the voice, but through your face. So if you think about the way, one of the reasons that the personal computer became really, really big is because it was a massive tool in the business environment, right? You could create documents, you could create Excel spreadsheets, like, understand companies' numbers, all that sort of stuff. And so it was a massive tool of business that then everyone kind of went, well, I need one of these at home as well, because I can obviously do my business at home. But in addition to that, I can do a whole bunch of other things at home as well on the computer. So VR, you could be if you're an employee of Ford, for example, and there's people all around the world that you want to talk to, and you want to talk about the design of the next Ford car, right? So you call up that design of the car, and it sits in front of you as a kind of virtual reality thing. And you say, oh, make the headlights bigger or smaller, or make the bonnet do this or that, and all the other people around the world are in the meeting room with you, and there's a whole kind of you're chewing through like hundreds of hours of work in just like 1 or 2 hours of time, because otherwise it's got to go across the world as a data file, as a CAD/CAM file, a design file, right? It's got to go across the world, and someone's got to interact with it and spin it up, and all of this VR stuff just circumvents the process, makes it really, really quick and very, very efficient, and you get a lot of ground covered.
It's amazing where the world's going. I know obviously Loftus has a very much an eye on this, and for me it's so interesting where it's going to go. Not even just from an investment space, just from a life space where what my kids are going to be involved in, what am I going to be involved with? Like even in my 30 odd years that I've been on this planet, seeing the advancements. I still remember walking down the street. I'll never forget it. Speaking to my cousin, going, this new internet stuff's going to be pretty crazy, and just, then now where it is today. And you have to look at like the likes of Zoom, and, what's happened there. And I think you hit the nail on the head when these businesses make them, these organizations make them so that it's right for business use. And becomes a daily thing of business use. Bang, bang. This is really 100%. Game changer.
Yeah, 100%.
We've got a bit to go through, and obviously we can talk about this till the cows come home. But Tesla, massive disruption company. Elon Musk is disrupting his own, let alone the company that's there. So we've seen Tesla really kind of bounce onto the EV scene or the electric vehicle scene, and I still remember that kind of speech where it was like, I want to electrify the car manufacturing, and we have started to see, I think it's probably nearly every manufacturer now coming out with an EV kind of model, or at least a commitment to. So how far down the track until it's a dominant force over petrol cars? Yeah, when do you think that's gonna?
Oh yeah. No, this is the biggest car maker in the world, which is VW, has committed to 100% electric range in the next. To be completed in the next 3 or 4 years. I'm not sure of the dates. And that's 10 million cars a year. The total car industry globally is 90 million cars a year. So they've committed to 10 right there. Everyone's coming out with a whole bunch of electric motors. It doesn't just disrupt the car industry. I've got a massive electrical storm coming over here. So if it gets thundery, just let me know.
Yeah, that would.
It doesn't just disrupt the car industry, obviously. Electric vehicles disrupt the oil industry, right? And so, if the dominant motive power force is no longer petrol in the next 5 or 6 years, but electric, and then, petrol becomes kind of more rare and petrol stations become more rare, etc., then you get this kind of network effect where more and more users are on more and more electric cars, and petrol gets harder and harder to get. So, it really has been a case of Elon Musk versus the car and the oil industry, right? And kind of he's won, right?
Yeah, and I think.
That.
And I think that let's talk this out. You've also got this clean energy space. These government commitments to obviously bring down carbon emissions. They're really kind of trying to look after the world, which from my ethical standpoint, great. We need to do this for generations to come. But this coupled with this whole electrifying the car manufacturer, you're right. The big players, the Exxon Mobils, the Shells of the world. Well, they've either got to learn how to adapt or they'll die. And to think about, the good old Standard Oil from, John D. Rockefeller, these guys have got to innovate. These guys have got to adapt, because if they don't, personally, I don't see it slowing down. And, for me, it's me and my wife looking and going, okay, are we going petrol, or are we going EV for our next car? And that's conversations that are happening around, dinner tables, I would imagine, all across Australia, if not all around the world. So, I think that, I see it, and like you've mentioned, I think Loftus and you guys see where that's kind of the head. Do you see any major disruptions against Tesla? Obviously, Tesla's come out as this kind of leader, but how does that actually go with, VW's commitment? That's another kind of clash that we're seeing now, like these traditional guys now going, we could probably make cars better than Tesla. We probably can't make them in EV space. There's another competition brewing there as well, isn't there?
Oh, yeah. So, and that's the central point, right? I mean, Tesla, it makes less than $1 million. We've owned Tesla, and we did really well for our unit holders, our investors. And that's terrific, right? But the car industry won't just be owned by Tesla in now or in 5 years. VW has got a massive commitment to electric. So does Chrysler. So does Fiat. So, all the car makers, so does GM, so does Ford. All the car makers are going that way. So Tesla's going to have a fight on its hands in the standard way that car companies duke it out with one another, right? I mean, no one's just going to lay down and say, here you are, Tesla, you can have the whole global market. That's not the way it's going to work, right?
Well, maybe those satellite things that he's got going in the sky and those rockets that he's going to Mars is where where maybe his focus will be in 5 or 6 years from now. So we'll wait and see how we go. So
I'm not going there, John.
Not going there? All right. I've actually been saying to my son, I said to him, I go, mate, would you go in the rocket? He's like, he's down to go for rockets. We're in the bed and we play rocket ships together. So my wife said, you guys can go. She'll probably get a break for a few years from us. Okay, she's got 3 boys in the house. So, yeah, I think I've already bought my ticket come 20.
I know, I'd love to go for the ride. I just don't want to go and stay.
Yeah, the fair. I heard the environment's not exactly a good one to be in, but we'll see how we go. So a question that I got asked is, can you give us a glimpse of the next area you and your team are researching? So this came from a client. Just like, where's your eyes focused at Loftus?
So we are focused on, what Zuckerberg calls it the metaverse. People call it virtual reality and augmented reality as well. We're focused on that. It's a productivity tool, right? It's not just for playing games, although that's great too. It's a productivity tool. The metaverse or VR, virtual reality, is a great productivity tool, and we're focused on that. And we've always kind of had a commitment to not just looking at what's coming down, a couple of years' time, but generating return, right? Our job is to generate return. So it's not just kind of some thought bubble that we're having here. It's about generating income for people with, super funds. So there's ways that you play. We have been already playing virtual reality for 3 or 4 or 5 years. We play it through the graphics processor units that are integral to it. And, we've made great returns for our investors through companies like NVIDIA and Xilinx. So, and as a productivity tool, Microsoft, who was on the stage with Zuckerberg for the VR thing, Microsoft has already come out and said, we are 100% committed to this. So, we're already playing it through Microsoft. It's an important part of our portfolio. So that, right? That's one. Then thinking about cars and alternative fuel sources. So the electric vehicle is great, right? But the problem is at the end of the trip, if you're, there's a range question, and then at the end of the trip, you might have to recharge the battery. And if it's a semi-trailer you're driving, or a train, or a ship, recharging the batteries could take days. There are alternate fuel sources like hydrogen, which burns completely clean, no carbon dioxide in the mix. And if it's produced in a clean way, that's a fuel source that doesn't require 12 hours of recharging at the end of the trip, right? It comes in a metal tube, and you just gas up and go, as it were. So we're interested in hydrogen and alternate fuels and alternate battery sources. So those are certainly two. And we're also really interested in genetic medicine. The first person to be between 90 and 180 days without type 1 diabetes already exists in America. It's only a 90-day. It's a piece of genetic medicine that works behind that. But that first person with type 1 diabetes is already more than 90 days through without having to go to hospital, once or twice a week. So that's coming, right? Genetic medicine is coming. And so that's another thing that we're kind of really interested in and focused on.
Yeah, it's very interesting you talk about that, because, there's a big focus on obviously advancing the human race from a technological perspective, as in like brain and thinking, but there's also in regards to curing as well too, and those sides. So it's very, very interesting. And history plays out. We've always tried to advance ourselves, and I think this is just a natural progression. So very, very interesting. Just to keep it quite general, because it is a long-winded question what I'm about to ask you. When your team goes to pick a certain investment, okay, it can be any investment, what's kind of the lengths or the research that goes into that? Like, I think there's a lot of people that sometimes think that investment managers or investments, like, look at, I don't know, a Morningstar report and off you go, 3 stars, and we'll add it into the portfolio. But can you just kind of give a glimpse to the listeners and the viewers of what kind of lengths, Loftus say goes to add a holding into the account, into the portfolio?
We've held companies for 5, 6, 7 years, and you can absolutely believe that we've been watching them really, really closely for 5 or 6 or 7 years. Of course, we do all the earnings calls, all the transcripts. Of course, we pull down the company's financial models, so we understand in granular detail balance sheet, cash flow, P&L, going back 5 or 10 years and project it out 3 or 4 years. It's not uncommon to have a 5 or 10 page financial financial model with 200 or 300 lines per page on it, going out up to column to column X, Y, Z, AA, B, A, C, A, D, etc., etc. It's not uncommon, right? And so all of that work gets done on a really granular level to sort of understand what are the financial levers that move the company, so that we can work out where the returns are. But before we even get to that, right, you've got to do all this kind of work where you understand, like, we talked about genetics a moment ago, where you kind of understand that there's something going on in type 1 diabetes, and that's significant. And then you got to kind of follow the reading through and understand how that all works. And we've got an expert, a Harvard PhD genetics guy, Dr. Rob Forage, who works with us to kind of isolate particular genetics, and his specialty is the genome, right? And he's he's breeding of sheep is something that he was integrally involved in Australia through genetics. And so it goes on and on and on, this kind of journey of understanding. You never understand everything about a company, but we give it a good shot.
And Alex, and I think it's a matter of, for the listeners and viewers to understand the sheer length that you heard in regards to picking, adding, modifying a stock holding that's in a portfolio. That, the Warren Buffetts of the world, the Charlie Mungers, the Benjamin Grahams before them say that most investors shouldn't invest in single stock holdings because they simply don't know the details. They don't understand the fundamentals. They don't understand how a business operates. And I take this from a personal sense. For me, in a financial advisory firm, to then jump and own a Macca's company, or a franchise, I know nothing about its processes, nothing about its procedures. And for me to be able to understand that company, I really need to understand its functions, how it operates, its fundamentals, before 100%. I invest it. So for people that are out there that are potentially just looking at a price that's on the stock market and going, oh, that looks good. Well, on what basis? On what basis does that look good? And so, thank you for sharing that insight and why another reason why I got you on here to understand that these decades and decades and decades of Alex and also his extended team.
Oh, yeah.
This is where it's going in, to get to the level where they feel confident to execute on a particular holding. And
of course, it's not a one stock or two or three. We buy a portfolio of 30, manage the risk through that, and take the return through that as well. So everything's got to be like, obviously that's our work, right? So.
And so, in say one of you in your portfolio, the other question is there cash being held? Is there like a percentage of cash that you hold? Because there's obviously some times when you might feel that you don't want to add in, and what would that kind of range on a traditional basis? And just for everyone listening, he does run a mainly growth orientated portfolio. So it is not going, we're not talking about your 50-50 balance. The intention is to get growth returns. But just.
So we can't hold less than 1% cash, and in practice we would kind of really very, very rarely hold. And when I say rarely, I think it's only been once in the 8 years of the fund, the strategy, more than 20, and we range between 1 and 20, and we kind of we take a simple view on this, right? When things run very hard, we sell things and generate more cash. And when things then fall, we buy stuff that's, as it were, on sale, cheaper, using that cash, and we can run down to sort of 1 or 2 or 3% cash. And we just, alternate between the 1 and the 20. We're more likely to buy, in a dip and sell at a peak than we are the other way around, right? That's the whole purpose of that exercise.
And that's based on the fundamentals of the company that sits behind it, the researching guys. It's not just looking at the ASX and looking at it bounce and whatnot, based on the fundamentals that sits behind that. So, even when we go, Alex, and we talk about, the Warren Buffetts and the Benjamin Grahams before us, they're talking about the same thing. And you're just hearing this kind of rebalancing, these de-risking, these strategy rules that are run through this fund. And for people that are viewing and watching, they're sticking to the rules, sticking to the rules, sticking to the plan.
We've generated the return we've generated over 7.5 years by we have a process, right? And the process has saved us so many times, right? Because sometimes we think, oh, that's really tempting, we should buy more of that, and then we run through the process, check the valuations and the cash flows and the last numbers and the last interviews with the company CEOs and the CFOs, etc., and go, well, actually, that would be against our rules, right? And we could have made more, certainly, by breaking some of those rules. But we also could have made a whole lot less. And so we have this, we are externally measured for risk. And through the strategy's life, we for every dollar of upside, we generate $1.31 of upside, and for every dollar that the market falls, we fall by 79 cents. So that's what they call our upside downside capture ratio. This is not my opinion. This is externally measured by people that look over us from a risk metrics. Right? So, and that's the purpose, right? And it's those process and those rules that come out of that process that help us to do that consistently, right? It's all about process.
100%, and you speak in the same language as I speak as well too. And I think the other thing is that as a human, we sometimes either can get overconfident in the investment world. We can start to have biases come in. We can start to, especially as a financial advisor, I'm constantly, holding myself back, because you can have a few good calls, yeah, and then you're like, oh, yeah, I'm on a run here. So even for me, for the people that don't know, I'm happy in sharing this. I actually internally have a financial advisor that looks after my stuff, yeah, and it's mainly to control the emotions so that I'm not playing with my own family's money, yeah, thinking that I'm backing winners when I'm not, and sticking to the plan. So, what I tell people when I, talk the talk, you walk the walk, you do it, you preach, you do what you preach. But thanks for sharing that. 2 quick ones for me before we wrap up. One, last couple of years have been a bit up, down, left, right, thrown on its head. I was looking to my book saying, where's this pandemic rule book that I need to kind of do? And it wasn't there. And, obviously back to, all the experience and the knowledge and kind of putting it all together to adapt. But 2022, a lot of mixed opinions going on at the moment, and we don't have a crystal ball. No one knows what's going to happen tomorrow. But just what's your gut feel of 2022 based on the fundamentals and the metrics that you see?
Well, so this is a fun thing to say, right? As I live my life, as we live our lives linearly, I don't know how this is going to end. So, point one, I don't actually, I really don't know how it's going to. But over this, time that we've been doing this, we've had down markets and up markets, all the way along. We've generated 20% per annum for our clients with, quite a lot of outperformance on an annual basis over that whole time. So I don't know how it's going to roll in 2022. The market could have a number of bad months, periods, quarters, could have a number of up months. Whatever we get through, we will play the hand we are dealt. So I don't know where it's going, but we're focused on it, and we will attempt to use the process to generate better returns than the market return that gives people. That's really all we can do, right? That I don't have a crystal ball.
Exactly. And for viewers and listeners here, we've got one of the best men in the business saying that openly and honest. And you've heard me say this before. And so we, as professionals, also try to not fall into the crystal ball. So you can look and see it. It's very tempting, but we try not to do it. And, 2022, I'm sure we can expect surprises like we've expected all the time. There'll be ups and downs. There'll be lefts and rights. So I think it's a matter of, once again, everyone sticking to the plan. You'll hear me say it again. It's pretty boring. Alex repeated it again, sticking to the plan. It's a pretty good one.
Keep to the code.
Keep to the code. That's exactly right. Now, many, many years of doing this, and I want you to imagine you're speaking to a young 18, 19-year-old, person. What's something you wish you could tell them, or what's something you could even wish you could tell yourself many, many years ago? So the question is, what is something you wish you knew at the start of your investment journey, or you would like to share to someone in their investment journey?
Okay, so the person who wins at life is the person who dies with the largest number of friends, not the most money or anything else. It's the person that has the largest number of intimate relationships. I mean, intimate in the proper sense, right? So if I could talk to my 20-year-old self, it would be keep your friends close and try and get as many of them as you can. One of the guys that works with us has been my friend for, I'm proud to say, 50 years. And he's still my best friend. He's an awesome analyst and a guy. And so my advice to my 20-year-old is be nice to your friends.
There you go.
Family. And when you get a family, them too. But as I didn't have a family at 20, that's not that important.
Yeah, I get it. It's very interesting you say that, because we talk about investments, we talk about all this, but it's got a lot to do with life. And a person who was really close to me was my grandfather. And when you said that, when he passed away, the church was full of people, paying their respects to my grandfather. But during his life, I didn't know him to have a lot of those friends, but he had intimate relationships where he didn't even need to see them all the time. It was just closely connected. And as my career has advanced in the last, 2 decades in the finance game, we all know it's not what you know sometimes, it's also who you know as well too. And having those relationships where you've got that opens a lot of other doors. So it's not just the intimacy of having those close connections, but it's also the networks and the ability to to grow together.
It's not just that, you know, if you're kind of really together in your own kind of emotional life, it's a really powerful tool for being able to think your way through problems, because you're not distracted by stuff that's hurtful, right? That's really important. In order to think clearly, you know, keep your relationships close to you, because that's really important.
Well, Alex, it has been an absolute pleasure having you on. I thank you for jumping on. It has been really, really good to jump on to another episode of Cash Talk and have you here with us. For all the viewers and listeners, you just need to literally Google the man's name and you will find him. But yeah, once again, Alex, thank you again. And yeah, have a great one, mate.
Thanks, John. Thanks for your time. Thanks, everyone. Bye.
Thanks. Bye.